The traditional approach towards evaluating education loan applications was to take into consideration parents' income, the collateral they could offer, and so on. New age lenders who are focused entirely on education loans use a slightly different set of criteria. They look into the student's academic track record, the course, university, and country that she plans to join, her likelihood of finding employment once she completes her course, and the income that she is likely to earn from it. In an interview with Business Standard, Amit Gainda, MD and CEO, Avanse Financial Services, says that from being parent-centric, the approach to underwriting education loans has increasingly become student-centric. I want to start today's discussion by asking you, why should a student come to a private sector lender like you instead of going to, say, a public sector bank for an education loan?
Sure. So Sanjay ji, I think fantastic question. Everybody has been asking this question that who should they take the loan from? I think a lot of people are also asking this question that should they take a loan? There are two ways I can address this question for you. I think first and foremost, let me say there is a market. There is a large market. You look at any consumer loan, any category of retail lending, consumer loan. Let's take the illustration of one of the largest asset class India and world over, housing loans. If an end consumer has to take a new house or a new home and chooses to take a loan, one can pay from own sources or one can take a loan. And if one chooses to take a loan, what are the options? A private bank, a PSU bank, which is what you asked me, or any other scheduled commercial bank. There is also an alternate option available of taking a loan from a niche lending organization, which could be anybody, a bank or a non-bank, who's primarily focused to that audience. I think there lies my answer. I took the housing loan consumer lending illustration analogy here. A niche player, a company such as Avanse Illustrative, which I represent here today, addresses to your requirements in a very, very focused manner. So as an illustration, what do we do and what do all other education financing companies would be doing would be looking at you and your priorities for the education loan and offer you customized solutions for it. So sector specialization is one way to answer it. The second way to answer it is hyper personalization to your requirements for the education loan specifically. And a combination of new age products, which is a mix of both, what should I say, the conventional way of underwriting this loan and the digital way of enabling that process. As such, a faster decision to you in the process.
So typically, how much time would you take to sanction and disburse a loan?
Sanjay ji, we are in various categories of education lending products. We have an e-learning business where, let me start by saying we are fully online. You could be on our own journey, our own digital journey called Avanse EduLoans. You could be on our partner journey. We work with 200 plus leading partners in the education space. You could be working on any of their journey and platforms. And if you are new to credit in the country, we could enable your decision-making process in as early as 10 minutes. It's completely digitally enabled. It is frictionless. All APIs are integrated, which means as soon as you fill in the application, which is a very simple process, in 10 minutes, we could give a credit decision. If you are not new to credit, this process will take only 5 minutes. This is for our e-learning loans, which varies between 50,000 rupees to 5 lakh rupees. Most of the loans are small ticket, relatively, and are in the range of around 1 lakh rupee here for this business segment. We are also in the business of, sorry.
For a student who is going abroad to study, how much time would those kind of loans take?
Sure. I was just coming there. For our higher education loans, specifically overseas to your question, which is a large part of our customer base. And the current focus also, that is where a lot of Indian students are putting in new applications, both for us and overseas loans in the market is growing. Structurally, the demand is amplified significantly post-COVID. There is also pent-up demand, as we know. These loans are typically in two asset classes by nature, secured and unsecured, Sanjay ji. Unsecured loan can vary from 10 lakh rupees to all the way up to, let's say, 75 lakh rupees. If it's US, it's a little higher in ticket size. If it's non-US countries like UK, Canada, relatively a little lower in ticket size. So let's say average US loan will be about 45 to 50 lakhs. A Canada loan will be 15 to 20% lower than that. These loans for a complete file, assuming a customer gives us a complete file, it is our endeavor to turn around the file in a very agile timeline of 3 to 5 working days. Majority of our loans we are able to turn around in 7 days, and in fact that is where Sanjay ji, I'll say to you, the hyper personalization and customized offerings that I was talking about allows us to do more for our customers, because we only do this because we are only student centric. Our customers, we understand, have timelines to get these sanctions, apply for their visas, book their tickets, plan their research. Our entire customer journey is focused on ensuring we are able to give the decision in a more agile timeline than a conventional other lender process.
So what are some of the typical mistakes that students make when applying for an education loan, especially students who are headed abroad?
Thank you, Sanjay ji. It's a great question. With your permission, I'll probably start by saying my 2 cents around this. I think first and foremost, any student who's going overseas is making a very large commitment. And especially if you are taking a loan, even otherwise, you are making a very, very large commitment for your own career. So please ensure you do your research right. And research for the country, research for the course, research for the university, and how the course and university that you're choosing, what kind of employability it allows you to get post your course completion will help you in your overall decision on seeking employability and upward mobility in life, as such meeting your academic aspirations. On that note, specifically to your question in regards to application for a loan, please do detailed research related to saying what will be the total cost of education. See, while you're taking a loan, this is going to be debt. You are adding to your debt portfolio. So you must be mindful that what will be my total cost of education, and am I covering, is my loan put together with my internal accruals that I am investing in this education cover my holistic cost of education or no? That's my first input to you. My second input to you would be build in inflation. Now, inflation could be coming in to you in more than one manner. And what do I mean by it? Look what has happened. Look at last 6 months alone, the way rupee is depreciated. The delta has moved by almost 5 rupees, which is material. So while the education fees is not gone up for the school that you applied for, the cost that you will bear is gone up simply because the rupee and the dollar depreciation has happened. So plan for both cost of inflation in your tuition fee and in your living expenses, and also plan for any such incremental depreciation of the rupee that will come in, which will mean while your fee absolute in dollars is not gone up, your cost of overall education has gone up. Try and work with a lender, whichever lender you choose, doesn't matter. But whichever lender you choose, you must have the flexibility tomorrow to go back and take a higher disbursement to the tune of the rupee depreciation so that your holistic cost of education is covered. Alternatively, you can work with any financier, but you should put in a larger corpus of margin money from your side so that you are able to cover your cost of education. I would also say understand the rules and regulation of the country you are going to on work permits. A lot of countries allow you to work on campus and off campus, which adds not only to your student profile and helps you in your employment when you pass out post completion of your course, it also helps you save some money and reduce your overall debt that you are taking and pay down your loan far, far faster, is what I would say. So fundamentally plan a robust repayment strategy on your education loan upfront.
What are
Back
some
to
of
you,
the
Sanjay.
factors that typically result in loan applications getting rejected?
Interesting question. Uh, a lot of people think that their loan eligibility is dependent on their parent or co-applicant's income. Um, it is a factor amongst many, but it's not the only factor. If you ask me, lenders today are looking at uh, a conventional approach of underwriting this asset class. And there are other lenders who have customized their offerings and build their offerings around the student. Uh, and they are looking at the student and the future income from this loan, as such, the employability in a very, very, what should I say, comprehensive and analytical manner. So let me take one example. If you would look at a conventional approach, somebody will look at do you have a collateral? What is the value of that collateral? It could be a residential property or a commercial property. It could be the current income of your co-applicant, parents, sibling. If you take a new age approach where lenders are focusing on the student, if I take Avanse illustration, for example, we look at the customer as a very, very student-centric approach, fully being mindful that this is the customer who's going for upward mobility, wants to seek admission for higher education overseas, and will be studying for anywhere between 20 months for a master's program to 23 months, 22 months, and there could be anywhere between 3 to 6 months of getting employment post this. So what we've done, we've looked at a comprehensive strategy encompassing the student's profile, the university course profile, overarching the country profile, because unemployment rates matter and they vary by country. Within the country also they vary by segment, and I'll probably take one or two examples with your permission here as well.
Sure.
Do we also look at co-borrowers? Answer is of course yes. The student is going to go overseas, so any lender and Avanse will look at the co-borrower profile. And last but not the least, the big important other criteria is this a secured loan? Is this an unsecured loan? Depending on if it's a secured loan, we look at the collateral. We also, as Avanse, offer a lot of flexibility on the collateral. So it could be secured by way of mortgage to a residential property, or it could be a bank deposit, which could be with your existing bank or a bank that we mutually agree to offer against to help you dip into your current assets while taking this loan. We've identified a comprehensive set of 60 variables, depending on the course, depending on the ticket size, depending on whether the asset is secured or unsecured. On the lower side, we have 45 to 50 variables. On the higher side, we have 55 to 60 variables. I know it sounds a lot, but it's all driven by DRE, which is business rule engine, enabled through artificial intelligence and machine learning. We look at the student's profile, we see your academics, we see how's been your academic journey over the entire K-12, so 12 years. And then if this is a loan for a master's, then your undergrad journey, how's been your academics, what is the continuity in education. We look at various such factors. Of course, one of the other factors we then also look at is what are your pre-test scores. So depending on, are you going for MBA or are you going for medical, are you going for, let me take another example, are you going for masters for engineering sciences, technology or math. we may look at your GRE score as well. If you're going for undergraduation, we'll work with you on your SAT scores and so on and so forth. Each of these variables goes deeply into determining what is your risk profiling. And basis that, we work with you and offer you uh, the loan proposal amount that you applied for against that a sanction or a decision, as the case may be. We also look at various other profiles. What is the university ranking? What is the course you are going for? Uh, is it Ivy? Is it non-Ivy? We work across the spectrum. What kind of employability trends exist in the past? What is the unemployment rate for the sector? A lot of other such factors. We've decided to hyper-personalize and customize our offerings to take care of our customers' needs. And we also look at the conventional norms, which is the co-borrower's income, co-borrower's bureau score. I think these are important things to look at, but our offerings to our customers are not based on any one or two criteria. It is a very, very holistic and scientific approach spread across these several variables. Some of them I have illustrated here to ensure that that we design our solutions for every student who's academically good and wants to go for higher education.
What is the range for the loans that you offer to students going abroad?
I beg your pardon, I could not hear the question.
What is the range of the loan that you offer to students going abroad?
So when you're asking me in range, you are asking me the ticket size, right?
Ticket
the loan
size.
amount. Wonderful. I think fantastic questions. The threshold generally on the lower side starts at upwards of 10 lakhs. Sanjay ji is how I would put it. But that is just the minimum threshold, if you honestly ask me. Very rarely it happens that people have internal accruals and then they have a small shortfall, and then they are typically in this range of 10 to 15 lakhs or a little above 10 lakhs. Let me respond to this question in the following way. If you're looking at a higher education overseas and you're looking at undergraduation, the ticket size to a master's program is significantly varying. And I'll illustrate this. An undergrad program in US, the fee will vary anywhere between $50,000 to $60,000. Plus there will be cost of living, which will be minimum of $10,000 to $15,000 a year. So if I take an average, that is $70,000 a year, or 60 to $70,000 a year, which roughly means close to almost $200,000 for 4 years. As such, the ticket size with current dollar rate of 80 will be very, very different from the ticket size if you're looking at a master's program. A master's program, again, for comparison purposes, to make it easier, I will take for US, will be anywhere between 18 months to 24 months at $50,000 to $60,000 again of tuition fee and 10 to 15,000 of living expenses, which means it will be anywhere between $100,000 to $120,000, $140,000 over a period of 1.5 to 2 years, depending on how fast you get your credits. In Indian rupees, if I give you a range, net of your margin money, you will also be expected to put in some amount of margin money, depending on your risk profiling, course, country, etc. The ticket size will vary from 10 lakhs to 75 lakh rupee for an unsecured loan, minimum to maximum. Most average ticket size US loans will be around 50 lakhs, 45 to 50 lakhs. For undergraduation, for masters, I correct myself. For undergraduation courses, the ticket size will vary from anywhere around 50 lakhs to all the way up to 2 crore rupees in Indian rupees. I took this illustration at the current dollar rate of 80, and you'll appreciate that while the tuition fee may not go up, depending on the university, course, and country you're choosing, in the current macro we are living in, the dollar is depreciating, and in the last 6 months has moved almost by 7 to 8%, 6%.
How much is the interest rate that you charge? If you could offer some
So,
range for international
sure,
students.
sure, absolutely. I think it's a great question. If I have to give you the range, my answer to this will be all loans are based on the lender's base rate. The base rate is a factor of at what you borrow and then how efficient you are in lending it ahead. It is governed uh, in a very institutional manner, and the range generally varies on that base rate, plus minus a reasonable spread. So if I have to give you today our offerings price range, they'll vary anywhere between 11% on the lower side to 14% on the higher side. The price, I'm giving a wider range. And why am I giving a wider range, Mr. Sanjay? Is because the risk-based profiling that I was talking about earlier determines your risk on your loan. As such, the price sometimes varies by 100 to 200 beeps, 50 to 100 beeps, typically in this range, depending on the category of risk. So secured loan to unsecured, the risk premium is different. IB to non-IB, the risk premium is different. Top 20 schools in the world, the risk premium is different. The lower the risk perceived on your loan, the better your academics, the higher the employability, relatively lower the price. Naturally, in the last 90 days or so, the entire markets have been seeing hardening of interest rates. And as such, some of the interest rates have cropped up. We've also had to increase 50 bips price. This is the current and recent macro and increase in repo rates.
Would you have any advice for the repayment stage? Advice to students who have already gone abroad and are now in the repayment stage. Would you have any advice for such students?
So, Sanjay, my view is that if you are earning in dollar, you're in a unique situation of advantage. While the rupee is depreciated, you are actually also benefiting because you're earning in the dollar. If you are not earning in dollar and you had to come back for any reason, then the situation is different. Which means you're in India, you're earning in rupee while you had paid in dollars. So your efforts to pay back the loan will be relatively longer tail. If you are there and you're currently studying, do understand the local policy, invest time, and take up the jobs. Whether you take up a job of a research assistant on campus or off campus, different countries have different policies. Canada allows you to work on campus. US during study period and non-study period allows you to work 20 hours a week and 40 hours a week respectively. You must try and optimize as much as you can without compromising on your studies. This will help you create either a war chest or simply allow you to pay down your loan faster, is what I would say.
Thank you, Mr. Gainda.
Sorry.
Yeah, please go on, please.
No, I was simply saying, in the long to medium term, don't worry too much about the rupee depreciating. You've gone there for a purpose. You've gone there to study. You've done a lot of hard work. You've earned your entrance. You focus on your study well, and focus on your employability. If you study well, the probability for you to get well employed is far higher. You will automatically be able to earn in dollars and pay back. And also look at the situation, rupee depreciation vis-a-vis a lot of other currency depreciation is been far
less,
lower. So if you are earning in dollar versus earning in pounds, you're in a far beneficial situation. And as you know, Sanjay ji, as we also see both at Avanse and in the macro, the maximum Indian diaspora going overseas is for masters US only. So what is the average straw profile? 23 to 25 years of child who's done his or her education, is done the engineering, is working today, has anywhere between 2 to 4 years of experience or 2 to 3 years of experience, and now has gone to the US and finished their masters. So if you're employed and earning in dollars, you're in a sweet spot, or you will soon be in a sweet spot. And while there is people are talking about risk of recession, inflation, which is real, clearly real, the fact is unemployment is also at its lowest. It is low single digit to moderate single digit and only reducing last many quarters. So you're in a good spot overall. I would focus on what is in my control, which is my academics. I would focus on, fundamentally, I would focus on what is in my control as a student, which is ensuring I do well in my academics, work to find a job on the campus, create a war chest, and gradually get a job, get employed, do well there, and pay down my loan dutifully.
Thank you, Mr. Gainda. This has been a wonderful interaction. I'm sure students who are headed abroad will gain immensely from it. Goodbye, sir.
Thank you, Sanjay ji.